Hey, good morning, Bob Trade Genius. The 29th of December. I'm going to go through a whole bunch of different videos this weekend, just kind of isolating the different asset classes. And Phil will be talking a little bit about cryptocurrency. Some pretty interesting things are happening there as well. But I titled this video, "What does earthquakes and stock market have in common?" And really the short answer is friction. And so with an earthquake, you get a lot of pressure building up, and then you get these market breaks, and I mean earth breaks, which causes the fault to slip. It's the same thing with the stock market. There's a lot of pressure builds up, and then nothing happens, nothing happens. And a lot of people get frustrated saying, I can't believe this, the Fed is tightening, the Fed is taking its balance sheet down. Then all of a sudden the market breaks. And we had that in December. And if you look at the chart here, is that we basically went from the top of the channel in here, and this is a little bit misleading because this channel is dynamic, but it broke the top of the linear regression channel back in December, and then it just drove itself down. And what was interesting to us and what we were calling for, and you notice from my other video, Are We Here Yet? We did around Christmas, is because we hit this bottom of the 2 standard deviations of linear regression. And I'm looking back, this is 400 hours worth of trading. And you can see we collapsed into it. And you don't necessarily buy the breakout. And you ever heard of Bollinger Band crashes? Well, this is of the same ilk, but it's a little bit more. I don't like Bollinger Bands because they wiggle around a lot, and you can follow a trade right down a Bollinger Band, and so I prefer linear regression. And then it broke back up, and we got our signal hit at the same time. Looking at just momentum oscillators here, is that we basically got basically a triple confirmation, right? So broke back into the channel. You had relative strength starting to increase. You had our signal hitting, and so it's saying money's coming in and opportunity to buy. And so this is why we thought we were going to get a bounce. Now, no idea how far and high the bounce goes. And one thing to caution, even listening to me or anybody else, is that nobody knows the future. I think this week probably told us that in spades, is that you can only go do best guess. And what the market's telling us right now is that this is obviously a relief rally. There's a rally here. This is a bit of a bull flag. And just so you know, too, with flags, is that typically three candles, the fourth candle needs to initiate, or it's not a flag anymore. It doesn't mean it's bearish. It just doesn't mean it's you can't really do measured moves, So this really is kind of a flag. But now we went 4 candles here, and now you have to ask yourself: is this just going to be a flat, or is this going to then fail? And my view is that we have a little bit of history here. So my best guess is that we're overbought now, but that doesn't mean anything. You can be overbought like here, and you can make a new high. So what you have to do is you literally have to respect that going into the first week of January, 401k, new year, build excitement, create a narrative, that there's still a possibility that we could pop into the next level of this linear regression channel. This is center 1, 2, 3. If it ever gets to 3 on either side, buy or sell with both fists, because it's extremely rare. And so now we just have to wait and see what comes up. But my personal view is that Monday will probably be a down day a little bit because of the way Friday closed. And but I think Wednesday, Thursday, Friday, and next week are likely to be positive, because you got the 401k money coming in, and they like to front run that. And then I think the second week and the third week of January, we're going to get a repeat of what we got here in the first and second week of December, because the the quantitative tightening is still in force. He has not changed, taken 30 to 50 billion dollars off, and we have a lot of political nonsense going on, and we still have all the trade nonsense going on, and a lot of people who didn't sell because they didn't want to pay taxes on their gains are going to sell into January, and they're going to sell into that. They're going to sell into that first week rise. So I'm looking for that then to fail and for us to continue down the path. So that's how I'm playing it. We bought SH on Thursday. Yeah, today's Saturday. On Thursday, and just bought some calls, and mostly for a hedge, just so I can operate long on miners. I don't know if we're going to get a flush of everything, or if we're going to get if truly the miners now have been becoming a safe haven, and cryptos are becoming a safe haven. Although the miners are getting pretty overbought right now, and so you have to just be cautious there as well. But anyway, I'm going to talk miners. I'm going to talk some really cool opportunities, I think, from a macro standpoint, and then I'm going to go through a bunch of other charts all through the weekend. I want to thank you for listening, and then for those who just joined us, make sure you get with us, and make sure if you're using our software Signal and TradingView, get us your TradingView name so we can get you set up. And if you are involved in any kind of coaching or anything like that, make sure you get that scheduled with us so that we can go ahead and get you guys on a good start. And join the chat room. It's pure gold. There's a lot of really good traders in there, and that really can help you get off to a good start working with us. Thanks again, and have a great day. Bye-bye.